Hey, welcome back to Everything Money. As always, we're here analyzing stocks. It's Seth, Paul, and Mo. We welcome you in. Our patrons all over the world, we know we love you and we love the fact that you support us. Today, we're talking about AMD. This is Advanced Micro Devices. Now, Paul, I'm not a chip specialist. Mo, I don't play these video games. I don't know much about this, but you love talking about these semiconductors.
I don't know anything more than you do.
Oh, really?
Yeah. What do I know about chips?
AMD manufactures microprocessors for computer and electronic industries. Sony, PlayStation, Microsoft, Xbox. There's a lot of we have violent conversations about chips when we bring this up.
AMD, Intel's dying. AMD's
people are very passionate about this, which is so silly because when I talk to normal people, they have no damn clue what any of this stuff means, So, but what we'd like to do is talk about this company, look at the ticker price, look at the fundamentals behind the company, why the ticker price is such, and what this company is doing. We'd like to come up with the price we'd like to pay for this company, and we'll look at the trading aspect. If you want to trade this on a shorter chart, Mo with his Bid and Ask Nation will be showing the trading chart. So, Paul, what's going on with AMD? Give us an update.
Okay, so AMD is considered the big competitor to Intel. The most common comment I get is, Paul, you're ignoring AMD. I'm not ignoring AMD. But when we start looking at the stocks, I also brought up Intel just to show people what I mean, and we're going to look at some aspects to it. But either way, right now, market cap of AMD is $132 billion. Their revenue is $13.3 billion, okay? Now, let's go to Intel real quick. Intel's revenue is $78 billion, and their market cap is $215.
Wait a minute.
Right. It's 6 times the revenue and less than double the market cap. So immediately I think to myself, okay, this screams overpriced. Now, what some people out there will be saying, well, yeah, Paul, but AMD has more growth potential. Okay, so let's do an assumption here real quick. We're going to come off let's assume AMD at their $13.5 billion grow at 15% a year. What other revenue grows for the last 10 years? Let's go to the stock analyzer, AMD. So look at, that's Intel. So right now, AMD has done between 8 and 75% revenue growth, depending on how far back you look. 5 years is 30%. Okay, let's assume for the next 7 years, AMD does that. Guess what? They're finally at Intel's revenue, assuming Intel does 0.
Oh, wow.
Okay, I get it. It's a little bit higher. It's $84 billion versus $78 billion. So it's got to grow 30% a year for the next 7 years, and Intel has to do 0 growth. Now, the argument back would be, well, Paul, if AMD is growing 30% a year, Intel would probably be losing market share. Absolutely. What I'm trying to explain to you is, looking at AMD in terms of a value play, 30% a year growth for the next 7 years.
Yikes.
That's a lot.
Tough.
And I think, listen, for any company, that's very, very difficult, especially a $130 billion company.
Right. With
$13 billion. This is very, very difficult to do. But that's just the idea. That's part of the whole, hey, what does my gut say to me when I see those numbers? I just really go, ugh. Now, PE, 38, that's an X. Healthy margin of 25.8%, that's a check. Now, let's look at Intel's real quick. About the same, 23.9% and 55% growth margin. So it's a little bit lower on the profit margin, a little bit higher on actually significantly higher on the gross margin. All right, so no dividend, which is expected for AMD, but so far we have 1 check and 1 X.
How about revenue growth over the past 5 years? I'm sure it's great.
Oh yeah, 4.8 billion to 13.34. Okay, so it's a check mark, but look at the last 5 years before then.
Yeah.
I mean, this is just bad. So guys, AMD, by the way, I've been through this before. Right when I was leaving college, AMD was the future. Nothing was going to beat AMD. Intel was going to die. It was over for Intel, etc. Fast forward 15, 16 years later, AMD still hasn't killed Intel. Intel's still around. They've still grown their revenue. So either way, this isn't just say Intel is better. I do think Intel's a better investment. Funny thing is, we just found recently that 3 major hedge fund value players have been building big positions in Intel. One of them has 12% of their portfolio in Intel, which was nice for me to see. But either way, I want you guys to look at this and get your mindset behind comparisons of companies. AMD absolutely has more growth potential than Intel. I won't even argue that. That's an absolute fact. But if you don't believe that there's still a price to be paid for growth, then what are you doing? There's still too much price to be paid for growth. So anyhow, profit on AMD's side.
Pillar number 4.
They went from losing a ton of money to making a ton of money. Okay. But look at this, Seth. Look at this. By the way, their PE was 35 with $3.4 billion in profit last year. Look at their previous 9 years.
Look at that.
They never even touched, their biggest year before them was $600 million in profit.
Wow.
And this, I would argue, is because of the chip shortage. They're probably able to sell a ton, and is that sustainable? So they're already on a high PE at a very elevated net income price. Something tells me their free cash flow will also be very, very high compared to their historical. But again, let's look at their shares outstanding. Oh, and look at this.
Selling?
No. Yes, selling tons of shares, 945 to 1.22 billion.
Oh boy.
Guys, this alone, if they grow 30% a year and they're issuing 6-7% more shares per year, they're screwing you. I mean, they're just not helping you at all. In 10 years, that's going to be double the shares outstanding. You might sit there and say, yeah, but they grew 7 times. You're right, but it's like they only grew 3 times then.
Sometimes people call this channel, Paul, we're hating on some companies. In reality, folks, is we want to focus on buying companies at a really great deal. Some people can't separate companies versus stock prices, Paul. They think if a company's going great, the stock price is going great. But we want to find those exceptions when the company's going great and the stock price might not be.
Because of perception.
Because of perception. And so,
by the way, 80% of value plays are 80% of what appear to be a value play is actually just a junk company. If there's a reason why it's selling so cheap. But your job, you find the 20% that aren't, you're going to make a ton of money.
So if you're finally serious about looking at numbers behind your investment, not just following ticker prices, you can have our software that Paul has behind him. If you join our Patreon, you get access to the software right now, and you get all these wonderful tools, including everything Paul's going to show you right now.
So guys, you get the mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, daily content on the web app, on the phone app and the website, access to all 3 of us, real estate calculator, stock screener, retirement calculator, Discord community. You'll be in a community of 4,500 people organized in several rooms where you can talk about your investment ideas. Guys, you get all of this for $26 a month. That's 80 cents per day, 85 cents per day versus $200 a month, $200 a month, and $35 a month. Guys, this is the biggest no-brainer value play. And whatever level you sign up for, you're in that level forever. Your price will only go up marginally every year to account for inflation. Other than that, if the price is $49 a month, you're still at your $26 level. This is a no-brainer.
Let me double down. We are not selling some conference or class or some PDF series. We are selling software that helps you make these decisions. We're basically selling you the data, and our patrons are absolutely loving it, Paul.
Well, it came from the patrons. They were like, hey, give me that data. I was like, okay.
Pillar number 6 is current assets over current liabilities.
$7.2 billion in current assets, $2.86 billion in current liabilities.
Jeez.
And guys, they also only have $3.5 billion in total liabilities. So they have a phenomenal balance sheet from that perspective. They have plenty of cash on hand and cash equivalents to pay off all the company's debts. Okay?
How about free cash flow, the big mamma jamma?
I kind of like this one a lot. Free cash flow is kind of important to me.
Uh-huh.
So guys, free cash flow. You ready?
Oh boy.
Negative 250 to 1.73 billion. Remember what I said? I bet you the free cash flow is some big, huge number.
Yeah.
The average is 345.
Yeah, but that average is all over the place, Paul. Look at these negative numbers over the past 10 years.
345 times 20 is 7 billion. The company is currently 130 billion.
7 billion?
Yes. Now,
oh my God.
Now, even going on last year's free cash flow of 1.73 times 20 is a $35 billion market cap. It's at it's a $130 billion company.
Yes.
It's still expensive. Does that mean you should avoid it? No. That's why we have the stock analyzer tool. You can put your assumptions in for growth and all the other metrics you care about, and it'll spit out what you should pay for the stock. That's what we're going to do next once Mo's done.
Mo, show us if people are trading AMD in the bid and ask nation.
So the cool thing about AMD is that over the past year, it's just been stuck in this consolidation range of between $80 and $90, and it basically hasn't moved from there. And finally, recently, it has broken out. So they moved through the sweet spot nicely. They're in that overbought area, but that stochastic is just shooting straight up. I've told patrons so many times in the past couple of days, I think this thing is definitely going to pull back on you. This has been in a very aggressive run. I think this started with earnings. Based on this date, yes, it did. But look at that volume that just started coming into the stock. So this is one of those examples where when you get 5 days in a row of just upward trajectory, tons of volume, eventually people are going to take their profits. Eventually it's going to cool off. So maybe they've broken out above that resistance line of $90. But if you're in it, take some profits, wait for it to build up again, and then catch a real run.
Mo, it's amazing how your rules and the volume just spikes, the price spikes, and it's just
yeah. The good news here is that we're over all 4 major moving averages. That's great. Hopefully it can hold that. Because you can see that over the past, 3-6 months, it was just stuck right there, right on top of these moving averages, finally broke out above them and has some upward momentum. So hopefully it runs with that for a while.
Yes. Go ahead, Paul. I was going to say, I'm looking at the 8 pillars, and we can see the greens and the X's. But let's look at how we transfer these 8 pillars into what we're going to pay for this stock.
Right. So, guys, when you put the stock analyzer tool, I pick 7 years, pretty much standard. They give you the revenue growth. They give you all the growth numbers for the last 1, 5, and 10 years annualized. Now, this is clearly just an anomaly, but I made my assumptions. I put in between 10 and 20% revenue growth, issuing 3% of shares versus only 1%, profit margin of 15 to 25, free cash flow between 10 and 20, PE between 15 and 21, and my returns of 15 to 10%. I hit the analyze button. The company is currently $108 a share, and it's giving me a range of around 20 to 100. So there's only one price out of all of these 6 that makes it, and that's the highest of highest all assumptions. So guys, what this tells me is I feel like this is an overpriced company. Now, you might sit there and say, Paul, you were too conservative with your assumptions. Okay, sounds good. Let me go 20, 25, and 30%. Profit margin, 20, 22, 25, 20, 22, 25. And somebody's going to say, argue with me on PE. I'm not going to bite. PE staying the same. Analyze. Okay. If you like all those assumptions, hey, maybe it's not bad at 108. But you got to like all of these assumptions above. 25% revenue growth, between 25 and 30% revenue growth for the next 7 years. Mm-hmm. That means it'll be bigger than Intel in the next 7 years. If you truly believe that, and only issuing 2% of shares every single year. In the last 1 to 10 years, that they haven't even done that low. If you believe in all this, buy AMD today. But you're making some aggressive assumptions. And when it gets to Intel size, you can't argue with me that it should now be a growth stock. Because Intel is not going to be. And I don't think it's going to be Intel size. I don't think Intel is going to flip roles with AMD where all of a sudden, is it possible they're both that big? Sure. I don't know because the world is still developing. There'll be more chips that are going to be required as the world grows. But I look at this saying, this just feels like an expensive company to me. But if you're comfortable with these assumptions, then buy the stock today. I'm just not comfortable with these assumptions. To me, value investing in general, is about making reasonable assumptions and then buying when the stock is selling for less than those reasonable assumptions say the stock is worth. Mm-hmm. And I just think it's not worth it.
That's our take on AMD. Join us at 9 a.m. Eastern time every morning for Mo in the morning with news and chart analysis. And we go live Tuesdays at 1 p.m. Eastern for everyone. So bring your questions in. All right, that's our take. AMD. Let's Paul, I see why you're still in love with Intel as much more over than AMD.
I mean, I just think, by the way, when I go buy a computer, I don't care if it's AMD or Intel. Mm-hmm. Do I like Intel a little bit more? Probably because of my bias of the stock, sure, but I'm okay with either one. But I look at it saying Intel is just selling for, even if Intel stays the same size forever, it's still going to give me an above average return in the market with buying back shares and everything. I look at it going, I'd rather just have Intel.
That's our take. Final thumbs up on the way out. See you next video.